This is the Best Stocks to Buy podcast. Looking for quality stock tips? Well, we bring you timely investment ideas based on the latest stock and market outlooks. Our ideas are driven by a proprietary software that reviews, analyzes, and ranks over 6,000 stocks every week. So you may hear the name of a company you haven't heard of before. You know what? That is often the best kind of opportunity, an opportunity to get in early before the investing masses. The Best Stocks to Buy podcast is made possible by Conner Management Group, a registered investment management firm serving individuals, business owners, and family offices. Hi everyone, this is Mathis Kahn with Conner Management Group, and this is the Best Stocks to Buy podcast. Today is Monday, February 4th, 2019, and this week we're going to be looking at the best dividend stock to buy right now. And starting off with our setup and approach, the objective of this podcast is to present to you a high probability upside for potential stock. The financial model we use is a proprietary tool that we develop that uses multiple valuation approaches while reviewing over 6,000 stocks every week. So the view you're getting is not driven by some sensational headline and some popular publication, but focused on increasing readership, but simply on the best investment opportunity we can find for you. An easy way of thinking about approach is to think about the method of triangulation that law enforcement uses to locate a cell phone. In our case, we use a form of triangulation to locate a future stock price using different valuation methods. Now, I truly view creating such a model as daunting, but I believe I was well prepared for the challenge of both computer programming experience as an engineer and over $15 billion of transaction experience as a banker. So my approach didn't come overnight. I painstakingly reviewed over 40 years of white papers, taking away the best that each had to offer, and then added some of my own tested intuition to implement new data sets that weren't even available as little as 10 years ago. Furthermore, my model uses both historical and projected values and takes into account management's historical accuracy of meeting the projections that they share with the public. And a point worth remembering is that these views are based on today, and never seen economic report or regional conflict or revised policy can change these expectations tomorrow. A benefit of using a professional manager like Conner Management Group is having someone experienced in making educated assessments about the uncontrollable, as well as having someone to readily share their opinion on whether a particular event is reason for concern. And now, so what did our model find for you this week? We found the best dividend stock to buy right now happens to be in the tobacco industry. On to our industry overview slide. The tobacco industry is comprised of a limited number of internationally operated businesses that's also guided by heavy regulation. So here are 6 of the largest competitors by market cap. British American Tobacco, Altria Group, Philip Morris International, Schweitzer Maudet International, Universal Corporation, and Turning Point Brands. Here are some growth drivers for the tobacco industry. There's the growing popularity of electronic cigarettes, the growing popularity of vaping devices, and these new devices have fewer restrictions on places of sale and advertising. Now, the industry challenges are declining cigarette consumption in developed nations and a greater health consciousness among consumers that are generally just shunning cigarettes. And now for the big reveal. The best dividend stock to buy right now is a company called the Altria Group. The ticker symbol is MO, and we see their 6-month upside potential at greater than 50%, in addition to having a very healthy dividend. On to the quick facts slide. Altria Group is the parent company of Philip Morris USA, John Middleton, and Philip Morris Capital Corporation. In 2017, The company operated in three segments: cigarettes, which were 88% of operating profits, and that included Marlboro, Benson and Hedges, Merit, and Virginia Slims, and then other smokeless products for about 14% of operating profits. The company also owns a 10.2% ownership interest in Anheuser-Busch InBev. The website is www.altria.com. That's www.altria.com. The company is headquartered in Richmond, Virginia, and they were founded in 1919, and they have about 8,300 employees. Onto the metrics slide. Over the last 12 months, the revenue for Altria Group was $19.6 billion. So, yes, this is a sizable company. The net income over the last 12 months was $7.0 billion, and cash from operations totaled $8.4 billion. The operating margins in 2018 were 39.0%, and for 2019, they expected to be slightly higher at 40.5%. On to the valuation metrics. The trailing PE ratio for Altria is currently standing at 13.3, and the forward PE ratio is expected to be 11.5. That implies that earnings are expected to increase. The PEG ratio stands at 1.3, which is relatively low, and the price to sales ratio is at 4.7. The price to book ratio is at 6.2, and the enterprise value to EBITDA ratio stands at 11.6. The company has a very healthy dividend and high dividend of 6.5%. The average dividend payout ratio over the last 3 years stands at 75%. That means that on average, the company's paid out 75% of its earnings as a dividend. On to the next slide, and it's the price chart for Altria over the past year. And about a year ago, the stock price was around $64, and right now it's significantly lower at $49. The stock pulled back from around the $64 level in November of 2018, and the stock pulled back in this third and fourth quarters due to concerns from the Food and Drug Administration on the distribution of electronic cigarettes. The next slide is called Looking Back and Looking Forward. Okay, so looking back in time, electronic cigarettes are quickly gaining market share. The U.S. Food and Drug Administration have issued warnings about taking actions to curb the use of electronic cigarettes. The company is waiting for approval of its IQOS heated tobacco sticks. Altria acquired a 35% ownership interest in electronic cigarette maker Juul Labs for $12.8 billion. Also, Altria acquired a 45% ownership interest in the Canadian cannabis company Cronos Group for $1.8 billion, providing the company with some diversification and an expected large new market. Looking forward, the U.S. Food and Drug Administration recently announced a plan to ban menthol cigarettes, though it is expected to take several years to finalize. Menthols represented about 20% of Altria's cigarette sales by volume. Additionally, projected earnings and cash flow are expected to drive higher share prices for several years, all while offering an above-average dividend. The next slide, the why now, the bull rationale. We expect this stock to increase for just a few reasons, mainly increasing sales per share over the next few years, and low valuation metrics right now, and low valuation metrics in the near future. On to the summary slide. The financial statement quality is very good. The net profit trend is increasing. The price pattern trend, as we mentioned earlier, has declined, but we don't expect that to be long-lasting. Overall industry outlook is positive, although this is not a health-conscious product. The increasing market share in electronic cigarettes, along with increasing earnings and cash flows, expected to benefit the company, and the overall market outlook is positive. The country is still expected to have positive GDP over the next few years. The recent closing price of Altria was $48.79, and a 6-month price target for the company is $76, giving this company a 6-month upside potential of greater than 50%, along with the healthy dividend we mentioned of 6.5%. So it's for all these reasons that we believe that Altria Group is the best dividend stock to buy right now. We hope you found this presentation helpful, and we'll talk to you again soon. Take care. Hi, everyone. Do you often wish you had a better feel for control over your investments? Do you often wish you had the ability to quickly get an answer to a question of yours when it comes to the economy or your investing choices? Do you often wish you had someone to bounce investment ideas off of just to be sure of your decisions? Well, I found you're not alone. And these are the reasons behind my firm, Kind of Management Group. Kind of Management Group is a registered financial advisor and investment manager in addition to being a podcast publisher. Our clients are professional individuals and small business owners. We help them invest and grow their retirement and savings accounts. Our special sauce, so to speak, is a comprehensive value and growth finding computer program we created that we talk about in our podcast. The program and our approach leverages time-tested growth and value investing principles and then some used by legendary investors Warren Buffett and Peter Lynch. Additionally, unlike others, we are forward-thinking and use social media to both serve and educate our clients and their families to become better investors. We figure the better you become as an investor, the more you'll appreciate what we do for you. We now offer a free mobile app available on both Android and Apple devices that offer our podcasts, additional stock picks, videos, expert interviews, weekly economic summaries, news, and more, including the ability to quickly send us a question or concern to me directly from within the app itself for a quick reply. To learn more about our service and to download our mobile app, just visit our website at www.connormg.com. Or if you prefer, simply give me a call at 281-947-2201. That's 281-947-2201. All right, have a good week.